If your company develops new products, improves processes, or solves technical problems, you could be missing out on thousands or even hundreds of thousands of dollars in tax savings. I'm talking about the federal R&D tax credit, one of the most valuable and most underutilized incentives available to U.S. businesses. In this video, I'll break down what it is, who qualifies, and how much you could actually save. So let's dive in. The federal R&D tax credit, officially called the Credit for Increasing Research Activities under Section 41 of the tax code, is a dollar-for-dollar reduction in your tax liability. That means if you qualify for $50,000 credit, you save $50,000 on your tax bill. This credit was introduced in 1981 to encourage American companies to invest in innovation. And in 2015, it became permanent, making it a reliable tool for long-term tax planning. Here's what's important. In July 2025, the One Big Beautiful Bill Act brought back immediate expensing for R&D costs starting in 2026. This means companies can now deduct domestic R&D expenses in the same way they are incurred and still claim the R&D tax credit. That's a massive win for cash flow. Now, when most people hear R&D tax credit, they think labs, scientists, and high-tech startups, but the reality is far broader. To qualify, your activities need to pass what's called the four-part test. Let me break it down. Part 1 is permitted process. You must be developing or improving a business component. That is a product, process, software, technique, or formula. The improvement could be functionality, performance, reliability, or quality. This could be designing a new product, improving manufacturing efficiency, or developing new software features. Part 2 is technical uncertainty. Your work needs to eliminate uncertainty about the appropriate design, capability, or method. In other words, you didn't know exactly how to achieve your goal when you started. Here's the good news. Even if you ultimately didn't succeed, the work can still qualify as long as you were trying to eliminate that uncertainty. Part 3 is process of experimentation. You must go through a systematic process to resolve that uncertainty. This includes testing, modeling, simulation, or systemic trial and error. You're evaluating different alternatives to find the best solution. Part 4 is technological in nature. Finally, your work must fundamentally rely on hard sciences. That's engineering, computer science, physics, chemistry, or biology. So, who actually qualifies? That includes companies that are in software development, manufacturing, engineering, food and beverage production, architecture and construction, agriculture, life sciences and biotech, and many, many more. So if you're developing new products, solving technical problems, or improving processes, there's a good chance you qualify. The R&D credit covers what are called Qualified Research Expenses, or QREs. These include wages, which are salaries for employees directly conducting, supervising, or supporting R&D activities. Supplies, materials consumed during the R&D process but not used in the final product. Contract research, these are payments to third parties for R&D work you retain rights to, and cloud computing costs for companies developing or testing software. Most companies find that wages make up 60 to 80% of their qualifying expenses. So if you have engineers, developers, or technical staff solving problems and developing solutions, their time likely qualifies. Next, how much can you save? Companies typically save 6 to 10% of their qualified R&D expenses through the federal credit. So, if you spend $500,000 on qualifying R&D activities, you could see $30,000 to $50,000 in tax savings. At Boast, we've helped over 2,000 companies access more than $675 million in R&D tax credits. The average claim ranges from $50,000 to $250,000, but we've seen claims go much higher for companies with significant R&D investments. And here's a special benefit for startups. If you have less than $5 million in gross receipts and haven't been in business for more than 5 years, you can apply up to $500,000 of your R&D credit against payroll taxes, even if you have no income tax liability. Now, a few critical updates for 2026. Starting with your 2026 tax return filed in 2027, you'll need to complete Section G of Form 6765, which requires detailed project-level documentation of your R&D activities. It's optional for 2025 returns, but now's the time to prepare. Second, if you capitalized R&D expenses from 2022 to 2024, you have transition options to accelerate those deductions in 2025 or split them between 2025 and 2026. Third, small businesses with average gross receipts under $31 million from 2022 to 2024 can elect retroactive expensing by amending their prior returns, but you must do this by July 4th, 2026. Now the Boast advantage. Here's the reality. The R&D tax credit is complex. The rules are nuanced, and many companies either don't claim it at all or they significantly underestimate what they qualify for. Traditional accounting firms treat R&D credits as just another service. They lack that specialized expertise and often miss qualifying activities. On the flip side, tech-only platforms promise automation for pennies on the dollar, but they miss the strategic qualification decisions that maximize your return. And when audits happen, they disappear. At Boast, we combined AI-powered technology with deep R&D tax credit expertise. Our platform automates data collection and creates a bulletproof audit documentation from day one. Meanwhile, our specialized team, with decades of experience working directly with the IRS, optimizes every claim to maximize your return. We provide 100% audit defense support, so if the IRS ever questions your claim, we're with you every step of the way. As one of our customers said, the claim formation process with Boast was great and a breeze in comparison to last year. I have a lot of confidence in the claim that's being submitted. So, here's what you should do next. First, download our complete 2026 Ultimate Guide to U.S. R&D tax credits. It goes into even more detail about qualification, documentation requirements, and state-level credits. I'll put the link in the description below. Second, if you want to know exactly how much your company could claim, schedule a free R&D credit assessment with our team. We'll analyze your activities and expenses to give you a realistic estimate at no cost to you. Federal R&D tax credit is one of the most valuable incentives available to U.S. businesses. If you're innovating, developing, or solving technical problems, you're likely leaving money on the table. Don't miss out on funding that's rightfully yours. Thanks for watching. If you found this helpful, subscribe to our channel for more guides on maximizing your R&D tax benefits. We'll be releasing state-specific breakdowns in the coming weeks.